Good morning. Welcome to the trade setup right here on BloombergQuint Live. And it's an important week, week full of fairly important global events. Least of all is the central bank meetings. So Federal Reserve, the ECB, Bank of England, Swiss National Bank, BOJ, all of them have their meetings lined up for this week, and a slew of other economic data as well on the global front. So after our own Reserve Bank of India meet done last week, this week is full of global central banks, and therefore important to keep an eye out on what the world does. By the way, it always is. And the world markets did okay, right? I mean, if you just look at what the US markets did on Friday session, but actually not as much Friday because it was fairly flat. But if you just look at what's happened the whole of last week, after a brief pull down on Monday, I think we've had a fairly decent week for our markets, for the US markets as well. Friday was an okay session. We've ended the week with a 4% gain for the global markets. Remember, we spoke at the start of December that December usually is not a bad month for world equities. And thus far, it seems to be doing okay. The question is, will volatility still be top draw, especially after what the Federal Reserve does and says? Because the belief is that I think Jerome Powell will sound a different tune this time around. Let's wait and watch if that were to happen. Asia and SGX Nifty, I reckon, would be showing some flattish cues. The futures, the US futures are flat, and I doubt that Asia and SGX Nifty are saying something completely different. So you probably have a flattish start for both. Indications from what the Asian markets are doing or what the SGX Nifty is giving as well. So should not be a surprise, viewers, that it's a mildly positive start to a flattish start. Now, for now, Asia seems to be actually doing really well. A percent higher or thereabouts after a week that was pretty good is interesting. What is the SGX Nifty indicating currently? Let's get that up on the screen as well, and also get the MOV function up on the screen to just try and show you what we did the whole of Friday too. So for now, about a 0.75% gain, about 137 odd points. So mildly positive. Nothing that should upset the apple cart from a bull's perspective. The MOV function will tell you that the bulls were pretty much in control at the broader end of the spectrum as well. As you can see, yes, there were a bunch of stocks that go down, which every time they do, but just look at the kind of gainers. And remember, the Network 18 group has been right up there in terms of gainers, but Siemens got an upgrade from Nomura, up 7%. A bunch of pharma stocks started to come back into the fray. Real estate selectively is done okay with DLF and Indiabulls Real Estate doing really well in Friday's session too. So all in all, not a bad day, and some of these will be in focus today as well. The trade setup, the Nifty seems to be better placed than the banks, but NBFCs certainly could do well. I think I'm picking up from a bunch of dealer desks that NBFCs are looking extremely positive, select NBFCs. So I think one would watch out for that. And you can get a sense that there is a bit of a change in trend for specialty chemicals and pharma stocks for the very short term. It's difficult to say what will happen in the very long term, because I think Q3 results could be mixed for a bunch of these stocks. But I think after going a bout of severe underperformance, you're starting to see at the margin a select specialty chemical stock or two, pharma stocks come back into the fray. There are announcements which are positive. I would urge viewers to take a serious look at this space, simply because after the Q2 numbers, almost everybody had said, oh, the companies have run their course. They've had such a long bull run. It's all over. I think that argument should be revisited. Just watch out. I think a slew of announcements coming out from there. That's those two pockets as well. So I'll be watching out for this. And the reason why we're saying that the Nifty could be much better placed than banks is, as is the case on every Monday, we get you a chart from Dr. C.K. Narayan's opinion piece that he writes for BQ. And it shows how, it's a complex chart, but having read the story, I can tell you, and some of you should try and read the story, by the way. It gives really good indicators this week in numerical terms, but in the chart, in the terms of charts, what it seems to suggest is that some key trend lines for the bank Nifty, as per the Ichimoku indicators, are still below, or the bank Nifty is still below some of the key trend lines. If you can see this chart properly, viewers, there is a red line below the cloud. The cloud is the blue colored cloud, but if you can see the red line, thank you for that, Virat. If you can see the red line at top of it, just below the cloud, that is a key trend line. And and the candlestick chart is of the bank Nifty, which is still below that indicator. So Dr. Narayan seems to believe that unless the bank Nifty crosses that, and that is a big hurdle, the bank Nifty will have some issues crossing those hurdles. So therefore, the Nifty is much better placed than the bank Nifty. And I could sense that that is probably true with the kind of FI selling we have. It's difficult for the banks to really outperform. Though we're starting to see at the margin some people arguing for banks to move well. I think Jeffries has come out with a note today on what will it take for HDFC Bank to rebound and a higher target price, etc. So all of that is interesting. What about stocks to watch today? I think Vedanta stays one. They on expected lines, you would say that they have declared the dividend that they were. And I think Amit Dixit of Edelweiss sums it up perfectly. He says that as expected, Vedanta board has approved a dividend of 13.5 rupees per share, which takes the total dividend to about 31. The quantum of dividend implies that the entire amount received from Hindustan Zinc's interim dividend will be distributed. And according to Amit, there will be no further need for dividend as the parent's cash requirements have been fulfilled. We all know that Vedanta's dividends don't depend on, how do I say, what the company has to do, but what the promoter needs, to be honest. And in some fashion, I think this sums up, Amit Dixit's comment sums it up. And therefore, maybe he believes that there will not be any further dividends that will come in from Vedanta's side. But this is an expected line, viewers. I'm just getting you the point that there is a dividend that has come out. I doubt that. I mean, difficult to say what will happen to the stock, really. Antony Waste will certainly have a good day, though, in trade today. They've received a 1,000 crore order from Delhi Municipal Corporation for waste management for 10 years in the Paharganj area. This is big for Antony Waste, and I would not be surprised if there is a strong positive reaction from this stock. Let's wait and watch what happens. There was some key bulk deals in the recent past which had pegged the stock lower. Select Smart Money has been bullish on this one. Let's wait and watch. I have no opinion on this one, really. I'm just telling you that I think the opinion that I have is that this 1,000 crore order will certainly make the stock react positively. So do watch out for this one. Electra Green Tech, ET is reporting that they're going to set up the biggest electric bus factory with 10,000 units capacity. Again, a stock in which the financials, if you look at it, will never tell you, and it will never give you an idea about whether this stock has promise or no. I have zero idea, but I think they're making the right moves. They're in the right space, and they are setting up a large electric bus factory. I think somebody made this point on Friday or Thursday in a report that if you look at it, the fastest EV adoption doesn't happen in cars. It actually happens in buses because the governments across the world take the lead in setting up clean energy infrastructure and clean energy equipment, right? I mean, they don't have necessarily economics to think of as much as social good, and therefore buses adoption would be very, very quick, and not surprising there. Do watch out for Electra Green Tech. I mean, it's had a mammoth run, so you got to be careful when you trade this one. But yeah, they're going to set up this factory, and that should work for the company. So do watch out for this one. Burger King India is an update. There's a board meet on December 15th to consider and approve the proposal to raise funds by way of further issue of securities. Do watch out for Burger King India. Do watch out, like I said, do watch out for Pharma. There are a couple of very interesting announcements that have happened from a large cap Pharma, and I think I'm getting you the brokerage notes on both. So on Dr. Reddy's, Investec's note on the launch of the generic Nuvaring, which they've gotten the approval, which is, according to them, a positive surprise because Dr. Reddy's will enter as the third generic and the fourth player in Nuvaring. Remember, the original company and the generic company. So it's a third generic, so the fourth player. They believe that for a four-player market, Investec believes that for a four-player market, including AG, price erosion would be in the 65 to 70% range, implying about a $300 million market opportunity. Expect it to be about 40-50 million peak sales opportunity for Reddy's at 15% peak share, and it might take some time to scale up as well. So you might get excited with this, but this and another note that I read on Reddy's seems to suggest that yes, the brokerages are bullish on Reddy's, but this doesn't really make a really meaningful dent or meaningful contribution for Dr. Reddy's. So some positives, yes, an added positive, if you will. Let's wait and watch if Reddy's reacts to this. Lupin, and again, brokerages are divided on the targets. Morgan Stanley note on Lupin, though, they are overweight with a target price of 1335. They say that Lupin is, of course, Lupin is disclosed for the first time the diagnostic business plans. A first read, according to Morgan Stanley, suggests an aggressive collection and testing infrastructure built out over the next 3 years, which could be an additional value driver for the stock if it's able to ramp up business over the medium to long term. The key, viewers, is not as much only about what it does for Lupin as it is for what it does for the space. Diagnostics is a very lucrative space. I think the incumbents already have a head start and they've established centers, they've taken key geographical posts, etc. But I think there is method to the madness in terms of what PharmEasy is trying to do, right? They've taken over Thyrocare, and they're saying the geography doesn't matter. Our men will come to your house, they'll collect the samples, etc., etc., etc. So maybe that's the model that India gravitates to, and in which case everybody has an opportunity. Cost will be the leader. So let's wait and watch what this does to Lupin. I think another broker, it's CLSA or somebody, has a target of some 935 thereabouts. So it depends. If Morgan Stanley's target is to be believed, there's a significant upside to Lupin. By the way, I've not mentioned Copran here, but Indian Patent Office has granted a process patent for 20 years for Copran's research labs for an API product, which is nitroxolin. Difficult to say how big a reaction could be, but if Copran reacts, you know why it is reacting. This is the announcement. They've gotten a patent process, which could be big for them. I don't know. Let's wait and watch. Lastly, what stood out for me amongst everything else is this chart, which shows now that for the last 3 years, and since India follows global markets, it's important to see the behavior of the global markets. For the last 3 years at least, and especially in 2021, the probability is moved up. This is a frequency of the S&P 500 rising right after a 1% down day. And last week we had a large down day, and post that the S&P 500 bounced back. Remember, the whole of last week we were showing you this chart of how there have been mini corrections after which the S&P 500 bounces back. We've seen that happen this time around as well, but this chart is interesting because it shows how the S&P 500 has such a high tendency to rise immediately after a big down day, and that probability or the tendency is actually increased in 2021, but it stayed high for the better part of 2019, 2020, and 2021. There was a brief period, of course, in 2020 when COVID impacted the sentiment so badly that it didn't do that. But post that stability coming back, every time there was a big down day, the probability or the frequency of the S&P 500 rising has been pretty high. And that tells you a story or two about the market behavior currently. Thanks so much for tuning in today, viewers. Have a safe, profitable day ahead. If you're stepping out, please stay master.